So, Dan, we've talked about how expensive the real estate market is, and we've talked about people who make a bunch of money and what those mortgage payments look like. What can somebody do that makes less than that? Yeah, whether it's a millennial, Generation Y, Z, whatever, anybody making less money, what are their options in today's market?
The most popular one, assuming you have decent credit, and I would say 680 plus credit score, is conventional loan. Fannie Mae and Freddie Mac both have this program where on Fannie Mae you can put 3% down. Freddie Mac is 5%, but Fannie Mae 3%. And if you don't make you don't make more than a certain amount of money, it's based on the zip code. And so you punch in the zip code. For instance, Kings, Snohomish, Pierce County in the Seattle market, it's I'm rounding here, but it's $165 a year. So if you make less than $165 a year, you get a lower interest rate and lower private mortgage insurance cost.
Okay.
So the rate's substantially
How
lower.
much of a difference does that make?
It's about 3/8% lower than if you made, say, $175 a year.
Okay.
So 3/8 in rate is pretty significant.
Yeah.
And the mortgage insurance is lower by about a factor of 0.10%. So that can be $100 a month.
So
on your
a little
mortgage
bit
insurance.
of help. A little bit of help.
Yeah, so a little bit of help,
Yeah.
and that's first-time home buyer program only. That's the number one program that we're doing. I'd say number two would be, FHA, but FHA, we don't steer people to FHA right away unless they have credit that's like below 680. And that's 3.5% down.
Wouldn't it almost be worth repairing their credit?
It can be, absolutely, if we can do that.
In a hot market, who is accepting an FHA?
Well, on a single-family home, there's question marks there because the appraisal is going to be stricter.
Yeah.
The condo complex has to be FHA approved. So you're right. Conventional is easier to get it in a hot market.
Yeah.
And so there's been some programs that have been kind of changed a little bit recently. There still is another one, like if you have what's called very low income.
What's very low income?
I mean, it depends on the county.
Is that what an appraiser's
It depends on the county. Yeah, it depends on the county. But like in King County, very low income would be like $60,000 or less a year. Okay. They'll give you like a $2,500 credit towards your closing costs, Fannie Mae. So I don't have hardly any of those clients, but there are some, in certain areas that might qualify for that.
Right.
And then there's another one that came out, and it's an affordable housing program. And the weird thing about it is they'll give you up to $7,000 in closing cost credit, Fannie Mae. And it's not based on the new property. It's based on where you currently live. So you punch in the zip code. Okay. You punch in the zip code, and if they consider you're moving from a lower demographic area, say an area that's kind of in maybe not the nicest neighborhood, the income's lower. This is
to increase our diversity and equity.
I think so. Yeah. So if you're moving from say a certain area, Seattle, like Rainier Beach or something like that, and now you want to move to the east side because you're moving out of that zip code to they're going to give you.
So from a lower socioeconomic, the median income is XYZ less than say over here. If you're going from there to there. Yeah. Interesting.
So that's a new program that just came out this year, and I was reviewing the guidelines the other day, and I was kind of shocked that, it was based on the current zip code, not the new one.
Thanks so much, and we'll have Dan's contact information in a link below. Reach out to Dan. He's a great mortgage broker. I've been working with Dan for years and years and years, licensed in multiple states, and I recommend him to anybody that's considering getting a loan. Thanks again for coming on.
Thank you, Sean. Appreciate it.
You bet.